Hi, Warriors. Big red day for Turnaround Tuesday. Sinatra, Shahab, Michael, Alexander, team. How's everyone doing today?
Morning,
They
Dale.
gave
Morning,
gave
Dale.
they
Morning,
gave
Dale.
you lower yields for your birthday, Stel?
I don't know if it was on my birthday, but yeah, we seem to be turning off the highs. Let's see.
Yeah, so I mean, pretty good break, red everywhere. Metals, currencies, yen. Why don't I start off with Ryan? So Ryan, yen pushing higher. We got to about 78.6 back here off this initial break. Any feel for the disconnect between, I mean, there's no safe haven buying with the S&P's down 30 and yields 10 bips lower on the 10-year. What's going on?
Yeah, I mean, for once, this one looks like it's taking its foot off the gas here. We had a little bit of a move up through Asia.
Yeah,
we had quite a bit of China data out, which wasn't too hot, which got the market jiggling around this morning. But this one's seemingly sitting on the fence a bit up here at 143. Maybe just waiting for that CPI on Thursday, I think, to come in. We had some mixed Japanese data as well on wages and household spending and stuff. So, yeah, it might be having a little pause, this one, and everything else is moving around a bit.
Yeah, dollar looks even stronger than the yen. So, you know, I thought that we might get a correction in the dollar. That's not happening. Looks like they want new highs. So the one thing I did notice, despite dollar strength, euro pound's hanging in there.
Yeah, you know, holding that 86 line, which is a bit of an on-off line. Probably not one I'd trade, but you know, it's hanging in there, like you say. And if that keeps going, we may get a test up towards that 87 handle again, and that'll be one to watch.
Cable, you know, even though the dollar's almost at new highs, cable's off its lows still by quite a lot. Euro's still off the lows, so risk off. It's all been Aussie. Any news about cable, or is this pretty much just, you know, risk off, dollar safe haven buying? Is that what we have today?
Well, the Aussie dollar again. Yeah, the Aussie dollar again, probably on the back of the China news. You know, it's had one of those knock-on effects. You know, it was the trade data that done it. Big drop in activity. Both imports and exports are down a big chunk. Okay. Even as the trade balance went up 10 billion. You know, and that's knocked on to commodities, which has knocked on to Aussie dollar and commodity currencies. You know, if you look at dollar CAD versus oil was looking for a break of 83s.
Yeah.
And now it's breaking down, and that's given dollar CAD a secondary wind, which is fine by me, because I'm still long from that 130, 150 area.
Beautiful.
Yeah, I took a buy stop on the break of 134, so that's sailing pretty. And yeah, so it's just Kay's been saying it in the room. China's the main buzzword today, and it's caused a reverberation through a lot of markets, and more of that's going to be happening tonight. We get the CPI data out of China, and if that posts a negative number year on year, we're going to see more moves again, because it's not looking hot in China anymore.
Yeah, you finally got that breakdown in the copper market, so now I know why. You know, China, but that looks pretty ugly. I think that we're going to take out these lows. So wave down and everything. So then S&Ps are down because of China too. So
that, and maybe because of what happened in Italy, they decided to slap 40% windfall tax on their banks, and that obviously hit Italian banking stocks, and then you get again more follow through in stock markets, all taking a sour note to that.
God, I always read that the Italian banks were teetering on the edge for a decade, and now they have windfall profits.
Apparently so.
Okay.
Yeah.
All right.
All the bad stuff got broomed under the rug, and that'll come out another day. But yeah, for now they're windfall profits. So
yeah. So let's go to Kman. The yuan, buddy. Looks like, you know, just like the yen. Looks like
Morning, Dale.
how are you, buddy?
It's Whack-A-Mole Tuesday.
Okay. All right. So
Hit everything, close your eyes.
sell everything?
Well, most. Yeah, so it's we were talking about those levels in dollar China, right? They have now broken that trade balance. Really was the straw, really showing very retracting activity data, and yeah, all the rest has got hit on the back of it, including yields, equity markets, gold, silver, because there's some counterintuitive moves going on, right? If yields come off, yen should have been stronger, gold, silver should have been stronger, but we are not trading yields. We are trading slower economic activity, and that's when some of those correlations all of a sudden get thrown out of the window, and things are not really moving like they should in a normal correlation. But that's why I'm saying just Whack-A-Mole Tuesday, hit everything. If you look at oils are lower, WTI back on the $80, copper is down. Well, I mean, it's a sea of red in the commodity market.
Oh my, yeah, they really got crude today down a couple bucks. Yeah.
So that bang, and that's one word, China.
Yeah, China, everything. So, you know, I've been talking about it for a while, because I remember back during the Great Recession, China was still growing, and they were a reason that we were able to pull out of it. They were the growth, at the time, the world's growth engine when we were going through that. And so if they could pull us out of a recession, why can't they take us into one? And looks like that might be happening, that things are worse in China. And because they're such a big factor in the global economy, especially with, you know, consuming commodities, that they could take us into one. We're getting their deflationary pulse here.
And regardless of what we heard over the turn of the year, last year, start of this year, people want to de-risk from China. Now we've got the proof we're not yet there, right? And also the Europeans have been said, like, we don't want to decouple, we want to de-risk a little bit. So that's happened in various stages between the Americas and Europe. But then when you see when China really slows down, the rest is still following. That really scares the market still.
Okay, so NASDAQ is taking out last week's lows, and now the S&Ps are doing it. So look how we held this. I saw this Sunday night, and we got the rally yesterday, but looks like a breakdown. It's gonna be some important areas. Stel, we're going to probably come up on your area. I think it was 440-ish, where you had some important support, or 60.
It's a range between 440 and 460, somewhere around there. 420 and 450, let's say, somewhere around there.
Okay. Because I see a couple of important things underneath the S&P on the daily. Really, you could just draw a trend line. I haven't extended it out, but just draw a trend line here. That I think you had that. So, you know, we could break trend in this, kind of like, you know, Apple had that uptrend going, right? This blue line all the way up, it gapped it. It's not down that much today, but looks like a broken stock. Yeah, so we have gravity here. You know, I'm trying the yen again, up in this range, wrong over the highs. Yesterday worked for a scalp, that's it. And I even tried to buy some gold last night. I'm on the verge of getting stopped out, and also silver. So wow, that silver doesn't look too good to me.
That was a heck of a move in silver. I mean, that one is really. I mean, I was actually more surprised to see silver underperforming, especially when Stelios is so bullish. I can't. Joking, Stelios. I'm joking.
Got a trend line coming in around 21.5.
Mine was getting severed. The trend line that I have that goes back from March
to these lows.
Yeah, that's the one I was looking at. So
okay, yeah.
The other one I see comes in around 20. That's a much longer term one. So
yeah, I think we might get to the 20 handle.
Can I show you something?
Yeah.
Like when you're talking about silver and I, look, I think buying silver on dips makes a lot of sense. Stelios thinks I'm like perpetually like bearish precious metals, but it's just the failure up in gold up at the highs that really had me a little freaked out. And I think silver will underperform a bit. But I would be a buyer here, and if we could get a dip towards, the 161% extension of this move, you can see how we're kind of severing this trend line here.
Yeah.
And I know you're looking at one that looks more like this, so you could go like that as well,
like that,
yeah. But I'm actually looking at this one. I think this one matters more currently, just because it's
breaking down.
It's trying to break down.
Not as weak as copper, but selling off in sympathy for sure.
Right. And the thing that I think is most interesting about silver is we completed an upside move. I mean, we completed, the triangle, the largest, extension we could complete coming out of this triangle. There's two of them, and you can see them both. I had them both as we were doing it. As most of we completed the furthest distance we could have out of the and you could tell. I mean, silver was outperforming gold broadly on the upside. Now I have a feeling it's going to perform
well. It has the gold silver ratio has gone up a lot. So yeah, that's true. I when I look at your chart, Blake, what would be a quality from the break that we had at the May highs to the July lows from the recent highs?
So if we did this, hold on, we can actually do that easier here. It would be about
right around your level,
right around there. Yeah, somewhere around here would be close. So, yeah, I mean that's entirely
I'll back
possible.
up the truck on miners down there. I will back up the truck on miners down there.
And for those of you that are harmonic type of people, which I am, I always find them very fascinating.
You play the harmonica, Blake?
I do. I play the harmonica. Yeah, when I did a little time in Tennessee, I played the harmonica a little bit, Dale. Sorry, it's early in the morning for us. We say silly things. So anyway, I think we might get that 20 handle. Man, the dollar is just on fire today, and we're seeing a drop in yields. And I know a lot of people would say, well, the dollar is not a yield story, but everybody has been saying the dollar is a yield story for so long. What do you make of this move in the bond market, guys? Brian, what are you noting as the move in the bond market when we're seeing this rally in bond? Is it that Moody's had downgraded a bunch of banks? We have the news in China. I mean, China's obviously they're pulling the lever now, and they want to reignite the exporting industry in China because they can't do it domestically. I mean, what's powering this move?
I think it's another round of locking in yield. China, if China's collapsing and not collapsing, but if China's looking very weak again, they're going to have to get heavily into the easing mode. And it's the same old story. If China catches a cold, so does the rest of the world. And that reinforce the doves for watching the economies in the majors, US, Europe, UK. So I think maybe we're seeing yet another yield locking, let's call it that.
And you know what, guys, first time I've seen a gap in the yield chart in a while. So we actually gapped lower on 10-year yields. If you look at the 10-year yield chart, you won't find many. I show a gap from last night on intraday.
Oh, right there.
There you go. Yeah.
Yeah.
Well, I mean, there aren't that many.
Call that a gap and crap, Dale.
Yeah. Okay. I've never, that's a new terminology to me, but it's appropriate.
Yeah, it is appropriate in this situation. Yeah, it is. So, I mean, okay, so we got China on the move. If you look at like the Hang Seng's gotten beat up overnight. Let me pull up some of these Chinese markets really quick. You can see the Hang Seng, getting clobbered. A lot of people trying to play, China to the long side, and I think it looks pretty dangerous. If you look at some of these Chinese markets, they look vulnerable. And then I think, Dale, you're pulling up copper. And copper looks really gross too. I mean, you got copper, a false breakout in copper right here. I thought it was going to be more of a channel resistance, and but channel support comes all the way down here. So I mean,
okay.
Yeah, I mean, but look at the false breakout of this big trend line. I mean, that's ugly, right? What happens if a lot of head fakes? Yeah. How about if we take out those lows? I mean, then you start looking at the doctor, and man, it could be brutal. Crude oil getting absolutely destroyed today. We are breaking the ascending trend line, and this is something that I've been watching carefully because a lot of people here know, and I know a lot of you guys have too. And Ryan, you were just saying, you and I were long the dollar Canadian around the same spot, playing the Canadian dollar. One of the big things that's held up the Canadian from not breaking out to the upside has been this rally, this amazing rally in crude. But here we are, severing an ascending trend line that's been in place since June, and it looks a little vulnerable as the Canadian dollar looks very weak. So, what are your thoughts here? Is crude, Kman? Do you think crude is a recession story now?
Well, recession. Yeah, I mean, it's come back. It's broken back below actually several shorter term trend lines as well. The one from June, it's broken back, which was around 82, and then another one around 80.25, which we are tackling now. But again, I mean, we had this. The last blip higher was triggered by the OPEC, right? With the Saudis continuing to say they would cut production. But then if you fail to underpin that with growth in one of the major blocks, that's not really very bullish. So I reckon we just consolidated the top end of the big range, and there is a risk we are getting back down to $78. Why not?
Yeah. I mean, I kind of look around it. This is, I'm right now, you can actually see this is all of 2023. This is a decent view because you can see this whole entire year. And if you think about this and from a range perspective, here is the beginning of the year, basically. And here's to now. I mean, the middle of this range, you can see the highs are a little lower. The middle of this range takes us back to about $75. I mean, and if growth really becomes a concern globally, it obviously is in China, not so much in the US yet, but we got like UK preliminary GDP this week. If we start seeing growth concerns globally, well, why couldn't crude oil trade back to the lower end of the range or even in the middle of the range? So yeah, that makes a ton of sense to me. Ryan, do you have any thoughts here?
Yeah, well, exactly what you said. We were looking for a potential break of this 83 level. Been watching the shit or get off the pot dollar CAD at 134, and it's got that secondary wind from the breakdown in oil, probably thanks to China again. I said it might be a quick run through 134 up to 135. Was a bit slow this morning, but it's kicked on now. I've just taken a little slice off my 134 break long. Up here, so yeah, it's 135 is going to be our next area, big figure, and then if we break that, could be well off to the races.
If you guys, Asia is sometimes pretty quiet for me, or for us, because it's, things aren't really moving. This is the ForexAnalytix chat room. Last night, this is from this morning. I'm still, I have to go back. Sorry, guys. I think Kman, this is where you probably got up. This is where Stelios got up this morning. It's where Ryan got up this morning. Okay, what day am I? I'm just looking. I'm sorry. I'm going to trying to get to last night. Let's see, where are we at? Last night before I jumped off. I'm trying to find where we. Sorry, guys. Anyway, last night I was saying, hey, we were talking about the dollar Canadian all day yesterday. And we're just like pullbacks have been very minor, right? So the pullbacks have been so minor in the dollar Canadian. We're probably going to break out in European trade above 134, and we launched. Once we got through 134, it's really taken off. And Ryan, yesterday you said that's the what did we call it, or what did you call it?
The shit will get off the pot level.
Yeah. And look, it finally got off the damn pot, and it really crapped. I mean, the Canadian currency crapped. So, real big moves in this Canadian. So, I mean, when you're in a situation like this, what do? Do you chase it higher, or do you wait for pullbacks? Or, I look at it as a move like this. If you're not in already, which, if you're in the ForexAnalytix community, a lot of you guys are already, long some dollar CAD from, down here in the 131s or whatever you're already long. But do you just get on it for a quick move, or do you get in front of this train and try to short it? What are your thoughts?
I don't think you chase it. I mean, I was long 131.50s like a lot in the room the other week, but I only added when we broke 133s, and I've added when we broke 134s. So you've either got to look to add on the breaks, but I'll be careful adding a break on 135 because it is looking a bit, I wouldn't say parabolic, but it's heading that way. Or you wait for a pullback, and a pullback to 134 if it holds. 133.90, 590 is your deadline level, if you like. If you get a pullback to 134, that's when you look to get in, because you can keep it nice and tight, and then look for a run higher. Or maybe you go for a 135 break, but you'd trade it like a short-term trade, like I did with my 134s. My buy stop was 134.15, and my stop loss was 133.80. Sorry, so I only gave it 35 pips. But then you can lock in your stop if it does move, and then you can look to build into it.
Hey man, what do you do with a big move like this? Do you stand in? Do you try to stand in the way, or do you just get out of the way if you're not in it already? How do you approach a situation like this?
If you're not in, this is not a level to chase. But if you're in, I usually manage my positions always a little bit. So I did it today, just in front of the 134.5. And then you let the rest do the job for you. I wouldn't chase it here, but if you look at how worlds are doing and China is doing, I wouldn't really stand in front of it. No.
Yeah, and that's a problem when and people get FOMO, right? I mean, Dale, you get FOMO, I get FOMO. Yeah. You get in front of a computer and you're like, oh dude, look at it, it's just taken off. I need to get in it. But this is a situation where the dollar Canadian, it's already moved. I mean, you think about it, it's moved 135 pips overnight. It's just for less than 12 hours. It's moved 135 pips. It's either, if you're not in it, you can't get in it here. It's too strong to be shorted, but it's too overbought to be, it's too overbought to be bought. So, you have to leave it alone if you're not in it already. Would you agree, or what do you do? Do you just start fading it here and short it higher every 10 pips and then hope for the best, after a 400 pip move? What do you do? I'm joking, by the way.
The thing was yesterday, right? When we hit the high in oils and dollar Canada did not come down, because I I
Yeah.
had a Friday overnight option and stuff, and I kind of overhedged it a little bit, and so I'm still long. But that was to me the sign. The signal was on Friday and yesterday. If you hit the highs in oil and you're trying to break those highs of the range, and your dollar Canada doesn't come off, then there's a problem if oil turns around, you know.
Right. The same thing could be said for the US dollar Norwegian krona, right? We've got a
same thing. We are on pretty decent levels there in dollar and euro Norway.
Yep. Actually, we're at the 200-day moving average, guys. And look, if you're like, this is way overdone, and I think crude's going to bounce back and stocks aren't going anywhere. It's August, for crying out loud. If you're in that camp, and you look at Norway, it has been fairly strong, and it's right at the 200-day moving average. Good risk reward if you want to be on the short side, and we still have a bear flag pattern. So I would choose this one over the Canadian if you're going to play it on the long side. But the Canadian is definitely moving, and we talk a lot about China, and Ryan, you said it. Hey, if China catches a cold, the rest of the world might catch the flu. We do the same thing here in the U.S. If the U.S. catches a cold, Canada.
That's what they used to say. If
yeah,
we catch
well,
a cold, the world gets pneumonia. Now it's if China catches a cold. The world
That's a
gets pneumonia.
great point, Dale. But here in the U.S., I think you can still say the same for Canada. And let's not forget, Canada is just they are going to get pulverized by the amount of fires that they've had this season, early fires, and it's going to probably affect GDP in the quarters ahead. So I think the Canadian is going to be a decent short for a while, although I don't think you need to be necessarily getting
How about USDMX today? You've been talking about it for about a week. I'm still risk off.
I'm still long, but we have to see a move above 1745. That's the key level. And we have Banksco this week. We have inflation data on tomorrow, actually. So Kman, what do you think about Mexico, especially with LATAM starting to get a little wobbly as far as rates go?
It's finally reacting some, but then if you look at the crosses, we are still very high in Mexico. So the dollar has reacted somewhat, but I'm still not impressed. I think it's if that combination CPI Mexico could be the clincher, because it could leave. There's two possibilities there. Either the Mexico all of a sudden catches up with the rest, stuff like Rand, China, whatever the risk.
Yep.
Or it's going to be your last one standing, and then there's probably, and which is possible right now, there's probably some rebalancing from other emerging markets into Mexico. But if tomorrow and on Thursday the data in Mexico, the data are a bit weaker, Mexico a little bit more dovish, then all of a sudden you're going to see your catch-up move in the mix, and then I wouldn't like to stand in front of it either if it breaks above, say, 17, 40, 45-ish. If that goes, then it's probably 18 in the next session or two.
Yeah, I would say 200 DMA comes in play really, really quick. I've been having these conversations with Mark Chandler from Bannockburn. We've been talking a lot about the peso, and he's written some stuff for some private clients that I put in the ForexAnalytix community. And he didn't think this move would get so aggressive, but I think he's kind of changing his tune here. Stelios, I haven't talked to you a whole lot this morning. Good morning, by the way. What are your thoughts?
I agree with your dollar Norway plan
analysis. You want to short it.
Yeah, I mean, if you want to short,
you think we're going here? Wait, we're going here to 3, right? Is that where we're going next? If we're doing that.
I'm saying if you want to short the dollar pair, this is probably one of the best ones technically. Today's move
technically and Stelios biasly. I said biasly. There you go. Go ahead. Sorry.
No, I was just going to say today's move is the yields are dropping. I've been talking about a medium-term top in yields, and I still stand by that. Of course, CPI in 2 days' time is going to be the thing that drives us to the next leg. And I think I will reiterate, I think we're going to be disappointed in the CPI to the downside. By how much, I don't know, but I think it's going to come in softer than expected. And with China, Data disappointing as well. I mean, this is all pointing to some kind of a correction, because let's face it, tighter monetary conditions eventually have an effect on global markets and the global economies. And I think we're going to start, or we're starting already to see this. German data has been pretty weak, and I think this is going to be happening all over the world. So what's the next step? The central banks step in. I think they will do it yet again.
You think they will? Gosh,
I think they will. I have no faith in them. That's why I think they will.
You have no faith, but everybody here should have the faith, right, Dale? You got to think about like what history. Finally, after 40, 50 years, we are in a different environment. This time is different. We actually have inflation for the very first time.
We're into the end game.
Right there. So Dale, I mean, this time is different. I know people always say, oh, this time is different, but this time is different. Anyway, hey, I know you have an interview. Who you got coming in today, Dale?
Dr. John Sinclair.
Dr. John Sinclair. Well, that's going to be a good person to have here.
Used to be Dr. John and the Night Trippers. Remember?
Oh, hey, no, and that is a callback to the day. I want to say, if you guys are not listening to, I get caught up in the mornings. I get caught up from Kman, Ryan, and Stelios each and every day, because I cannot be awake at 1 o'clock in the morning to listen to their show. It's 1 o'clock in the morning or 2 o'clock in the morning for me here on the West Coast, but if you're not up listening to Ryan's show with Stelios and Kman, the Flow Show, you got to be there. Thanks everybody for being here with us. And Dale, I'm going to pass it over to you. Have a great interview. All right.
To be in the know, you have to watch the Flow Show.
That's right.
And thank you, team, and appreciate all the input. Thank you, Kman and Ryan and Stel and Blake. I like the way we prep people every day. You know, that's our mission statement, to build up and edify. So mission accomplished. Okay, Dr. John Sinclair. How are you?
Morning. Good morning.
Hi, how you doing, John?
Good. Thanks for having me on again. I hope you're enjoying your summer.
Depends on the day as a trader, right?
That's right.
It's been pretty hot. Where do you live, John?
Pretty hot. We're in Charleston, South Carolina. So
okay.
It's a little humid here.
Yeah. What's like the heat index on the bad days? In hundreds?
Yesterday had to be 110. It was so hot.
Okay.
Just walking was like breaking a sweat. So I was like, let's go inside, look at some charts.
All right. Well, I think talking about breaking the sweat, I think the long's in the market for the first time in a while. Another doctor, you look healthier than Dr. Copper today. Copper breaking down on China. What are you doing in this environment, John?
I'll tell you, this is like I said, pretty much the same as last time. It's been a day trader's market, but you have to know when to be in and when to be out. Yesterday was a chopper, right? Yesterday was a chopper on for a Monday, but we've been having some fun days. So if you know when to stay out, right? And sometimes it's okay to trade and just kind of put your feelers out there. And if things aren't working, that's where you don't want to force it, right? So especially if if you know your statistics and your setups are consistent, just know how to stay out, right? And don't let yourself get chopped up. Yesterday was one of those days where
you're showing a monthly chart here.
I do, yeah, because
okay.
Just to kind of chime. Yeah, just to kind of chime.
It's kind of weird for a day trader to be looking at a monthly, so I want to know why.
It is. Well, we always do that, right? So we always start off with the larger term time frame, just to kind of see where we are, and then it can give us a little bit more perspective, especially if we start seeing really good strength, as we've seen the last couple months here on the monthly chart, and we're starting to see a little bit of chop. I mean, right now you can just see we're starting off this month here. I mean, wow, we're already on the 8th here of August, but we're inside last month's range right now, so it's red. It's just kind of our interesting conversation that you guys were having. It's is it the beginning of the end? And it's possible, right? So what I wanted to do is just show this trend line that we've been tracking here. This is since the Great Recession, right? So go to the highs, go to the COVID lows here, and we're kind of floating pretty high above this trend line, right? And Yeah,
it's kind of nosebleed territory.
It could be. And so, as you know, we like to take a look at, wave counts. And so we've had this wave one ABC down, right? So here into the Great Recession, and then boom, wave three, right? So the real question is this it for wave four? And we're back to all-time highs, right? Or is there going to be more to this thing, right? So is it going to come back down and retest this trend line, maybe break it, maybe, all the bears are, it's going to go back down.
Where's that come in? Around 3,000?
Yeah, so this hits here. This hits in a couple of years, right? This is like just pushing ahead of it is 2025, 2026. So the real question is this really what's happened? Like you said, this is under 3,000. Yeah, so this is that 3,000, 2,900 area. It depends how fast it goes. So
how about by year end? Where would the line come in?
So it all depends on if things go right.
Okay, well, yeah, give me year end where the line is on year end.
Well, here's the deal, right? So this may not be it, right? So this may not be it. There's multiple wave counts, right? And so when we have multiple wave
counts,
you're
not going to answer my question. So put your cursor.
I got it. I'm gonna here. I want to show you. So what we look at.
All right, go ahead. You're the host.
Here's the guest. Here's the A. Here's the B. Right. If this thing goes sharply, right, we're looking at November 2024 as a very sharp down move, right, and that would get us here.
How about December 2023? Where would that line come in?
Let's see if we go. Wow, it looks like we're at all-time highs by December. Based on this.
Really, where does that purple line come in at the end of the year? You're showing me 2024.
If like this thing dropped instantaneously.
Okay, there.
December, that would be that would be a very sharp drop. Right now, if we took two Corona crashes and put them on top of each other, we might see that. Right. So there was a little scare in the market not too long ago. Right. Wasn't there the market dropped a little bit on what was it? They were saying that Russia was moving ICBMs or something like that. Intraday, we got a nice drop on that, right? And so, and now you got that Oppenheimer film out, right? So it's kind of pushing those thoughts out there in the. So is that the next scare thing that's going on out there? That's good.
Sorry you brought that up because it is a worry.
It is, but this was a scare, right? The COVID thing. I mean, look at it. It was a 2-month scare right there, right? And then it was boom, back to all-time highs. So that might not be it. That might be the catalyst. Might be too obvious, right? All
right. So. Thanks for finally answering it, and just carry on with what you're doing. You have a view on Apple? Is it a broken stock now?
So that's another good question. So that one is actually fulfilling its ABC. I do want to show this here real quick, Dale. I know
go ahead.
I want to show so this is a big one right here. So again, we look at Fibonacci, right? So we go from the highs to the recent lows right here. And you can see just even on the monthly chart here, we're banging on what we call the platinum zone, right? So we're between the 786 and the 886. And we're back, we drop back below here on the monthly chart below the 786. So the real question is, are we going to see any downside follow through on this for a potential impulsive wave down? Now, wave C's are typically impulsive, which means fast, right? So if this thing is going to happen, then I would expect it to be fast and furious. And then kind of go from there. Now, the goofy thing about Elliott wave is that we could get a running flat and this thing could go to all-time highs and still be a wave 4, right? So we really just need to pay attention to the price action. That's why I'm saying this is a day trader's environment. Yeah, because we're just kind of testing these levels right here. But so
everything can happen.
Exactly. So Apple, is it a broken stock? So probably not, right? But we did get this. What have you guys talked about this recent rebalancing, special rebalancing of the NASDAQ?
I didn't really understand it, but it's almost like they knew it would be a good idea to do it.
Right. That's the way, right? You always want to play into the conspiracy of the market, and it's but it kind of makes sense. It's if they knew that Apple was going to start having some trouble with iPhones, why don't we just kind of make it less weighted on the market, going into it? And so, there is a breakdown pattern here. Monthly chart, guys, if you kind of just zoom in here,
it's like a false breakout. It could be a false breakout.
It's not quite a bearish engulfing candle, and it's not quite a monthly evening star, but it certainly is a bearish candle, right? So
it's a huge range.
Yeah, and one of the things that we're looking at here too is this market has been, or this this stock generally has just been, kind of not behaving according to harmonic moves here. So, if anything, 1, 2, 3, ABC, 4, wave 5 could be done. And we could just be in just a mini ABC here. And that might have been the A there if we gap up here today and then a little B down there. Is it broken? Not yet, right? So it's
Not yet.
We would still need to lose some major levels on it, right? So that's kind of one of the big things.
Can you make a case for 120 again, 115?
I mean, there is definitely a case here, right? So that's a huge level, right? Huge level right here. Boom.
Right.
Now 120, it would have to break down below there, but definitely, certainly a test of the 140 area is is in the cards. If we got a little bit of a steeper wave A down, little wave B, little wave C, that takes us right there. So
okay.
Very possible.
Thank you, John.
Yeah, my pleasure. Amazon,
so what do you,
Amazon?
So what do you focus on? Are you selling rallies? There've been a couple good rallies to sell in the S&Ps. We had Friday, we had Monday.
Yeah.
Are you trading both sides of the market during the day?
Yeah,
okay.
Yeah, we're looking at both sides for sure. One of the big things that we look at, so like we talked about last time, is at the open. We really like trading the open, and we like looking for quick waves at the open because, who doesn't like to be done by 11 o'clock, that type of thing. So, so as we just go in and look at, each individual day, as we look at the type of price action that we see at the open and if it warrants any an entry or not, right? And so, so yesterday was a pretty tricky one. We had a really nice push up. Right, everything is looking bullish, and then
That's
once
Friday,
well, sorry, this is just I think this is just yesterday, isn't it?
Oh, okay.
Yeah. So we had that big push up early, and it's like, okay, is this thing getting ready to rally? And then it completely took it out, right? And so when we see that, right, so that initial wave up is it looked impulsive, right? So what we expect of when we see an impulsive wave is 1, 2, 3, 4, 5 up, right? But once it gets taken out at the lows right there, we have to recalibrate and say, hey, something else is in play here than we were expecting, right? And so when that happens, is I usually start out with some sort of ABC formation, right? And so once that was taken out, I've got this A, B, C type formation. And then after, and this is just trading the open, right? And so I'm either looking for an ABC or I'm looking for an impulsive wave. Right? If I can count a 1, 2, 3, 4, 5, then I'll look to trade at ABC, ideally a wave C because it's impulsive, right? And then if I see an ABC to start, then I'm going to look for clues that an impulsive wave is starting. And then even if I mess up the count, usually if I catch a wave C, it's normally a wave 1 of something else, right? Yeah. Or if or if I catch a wave 5, then I'm catching a wave C of something else, and it all kind of ends up working, right? That type of thing. So, so here we look at a wave C, ABC. And then you can just see here that we, at this point, we're looking for a 1, 2, 3, 4, 5, and we started to get some impulsive action yesterday. Now, very, very difficult to trade in an ABC, right? And wave C, I would have expected to go a little bit higher, but we never got an impulsive move. We just assume it's that, right? So we get our 1, 2, and then you can trade a nice little wave 3 down here, wave 4, and then you finish. You can catch that nice wave right there, or finish it down to the next area. And then from there, you can try to figure out what it's doing.
So on the cues, typically, how many points? I know it's based on the market. You have market stops, not money stops, but do you look for, when you're day trading the cues, a certain amount of risk? What I'll
do is on the cues is I'll trade options on the cues, and then
okay.
So what we'll do is we'll just trade straight. I'll look to trade straight options.
Are they the 1 day options that everyone else?
Yep, the 0 DTEs. We have fun. So here you can catch a nice move, right? So you can easily catch 10% if it's moving in your favor. One of the things to note is if you look at an out of the money option and it's moving against you, there's probably something wrong, right? Because if you're used to now trading the 0 DTEs, which we talked about last time, right? Didn't we?
Yeah.
So 0 days to expiration. So that's today's expiration, right? So if you're trading the 0 DTEs, right, you're going to get that fast move because it's trading on 100% basically price action volatility. Whereas you have a lot more theta or time cooked into the later options. So if you see those later options really start to pull back more, there's probably something bigger going on in the price action, right? So I'll look to trade future. I'll look to trade options in the money or just at the money, 0 DT options on the Qs. Hold on one second. Oh, okay, cool. And then
you get your tells. You get your tells by looking at the deferred options. Yep,
you can get some tells by looking at the deferred options, and then I I like to trade the NASDAQ futures, right? So the NQ. So and that will and I trade based off of that chart. And sometimes I'll look at the Qs and see if there's some similarity on that. So how many points am I going for on the NASDAQ? I'm pretty scalpy on it, right? I don't like it because if it pulls against you, it pulls against you really hard, right? So you know, if I can catch 5 points on it, you know, I'm really happy. And then you know, automatic trailing on it, you know, so we're going boom, 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 get 10. If you can catch 15, sometimes you get a really nice one here. This was we had some annoying price action yesterday. It was like we started off the session with, right? So you know, we broke down below these levels right here. You know, you can catch a nice little move right here, range of candle. If you look at, let me see if I can get the NQ on here. NASDAQ futures. Right. Let's see where we are. Oh, plunge protection team already came back in today, so we're good. Everything's fine, guys. So yeah, here you can see this the breakdown below these levels right here. You know, not very giving, right? But here, you know, you're talking about like a nice breakdown here, 71, right? Gets you down to like 62, 10 points, right? So you know, makes for a nice day.
Do you keep track of your hit rate, John?
Yeah, so I have statistics on the hit rate for that, and it all depends on the setup, right? So it all depends on the setup. So okay. I've been hitting 93% on these.
Wow.
But I don't trade all day.
That was a nice question to ask you.
Yeah, so I observe most of the day, right? So I trade mostly in the morning, right? Because that's where you get the biggest moves, right? And then later, and you see here, sometimes I'll put my feelers out intraday for a breakout. Look at this. Just trying to break out over any of these levels right here. It's just like, oh, just like one little tick, right? And that'll chop you up, you know? And if you get angry and you start trying to push it, right? Then you're done, right?
You are done.
Yeah. So, but again, yesterday was just kind of giving all the clues here all day, but you know, it finally pushed right at the end. Right at the end, gave us a little bit
nice of a squeeze.
There. Yeah.
So what do you do on a day like this where we come in sharply lower?
It doesn't matter. It doesn't matter where we open. You know, so like I said,
we're coming back. I think you showed the chart that we're recovering.
Yeah. So so this is interesting. So today, right? So here, this is just this is already happening. Things were looking pretty bearish here going just even before we came online. Right, 8 o'clock. We were like, yeah, let's go. Let's have a nice day. And then back to break even.
Okay, and this is a 1 minute chart. Okay.
Exactly. Yeah. And just like you guys were talking about on the last show, you guys were you know, talking about, oh, the central bank will come in and say, yeah, they always do, right? So here they are coming right back in, buying it back up.
The plunge protection team up here.
Plunge protection team to the rescue.
Yeah. Okay. All right. So appreciate you know, showing your stuff.
Yeah.
Anything else you want to cover with us today, John?
How about you? How are you feeling about things? You know, how's the overall market? You see my perspective on it. Do you think we're going to get that wave 4 pullback, or do you think I've got a bullish count too to take us back to all-time highs and even beyond? So what do you think?
I think we at least test the battleground area of 4,200. That's where things really started to accelerate. So that's a level I'm looking at. That people calling that a breakout. So we'll see what happens down there.
I like it.
And I think the strength is you know, not going to be in mega cap. You know, you're getting big moves in things like deer and cat and the real economy. You know, I mean, they used to be out of favor.
Yeah, and then you had UPS this morning with a miss, but it'll probably be green by the end of the day.
Okay. So John, you want to show? I know someone's asking. Saloom is asking, who is this guy? He trades my style. He trades my style.
Trades my style. I like it. Okay, yeah, so I'm a trader, longtime trader for over a decade, and got a PhD in business, and I love business. There's really not much relation to stock prices and you know, fundamentals of business, but it is still interesting to see how companies are doing. I like that. So you know, it's I think it's okay to tie into both a fundamental narrative and a technical narrative. So I prefer technicals. I enjoy Elliott Wave. I enjoy the psychology. I don't know how much I enjoy it, but the psychology of the market is interesting, especially on the daily charts. I prefer it intraday because you can kind of be like, oh, I know what you're doing. I see what you're doing. But intraday, it's like they gap you the next day. You know, I mean, talk about the most bearish candle here.
Yeah, Friday.
These last two.
Yeah, we got jammed. Yeah. Oh yeah, that one. Yeah.
Yeah, it's like, I mean, come on. And then here, what was this? This was Friday,
yeah, Friday's close, and then
we were joking around. We're like, hey, look, we have an outside bearish engulfing candle again. We're probably going to gap up on my boom. Gap up.
Yeah, it does seem to work that way. And you know what? There's a lot to be said about, being flat overnight. I mean, if you can work it as a job, I mean, you have to really dedicate. How many hours a day are you in front of the screen?
Well, I agree, Dale. And, psychology is such an important part of it. Not even psychology, just, I mean, however you want, I don't want to be like,
stress.
This is a particular formula for this. Everybody
doesn't it reduce stress not having to, who cares what happens overnight?
Who cares what happens, right? So, I mean, yeah, if you have
takes pressure off you.
Know your levels, right? Know your risk and just, kind of move on. But goodness gracious, if you're looking to make big bank overnight, right, limit your risk, right, and and limit the stress overnight. Deal with it the next day. And don't go for the rush. Because the downs can be just as bad. You know what I mean? So it's avoid.
If you're looking for the rush, you're going to end up fetal.
Exactly.
Right. Exactly. So best way for people to and tell us about your business model and what you do with traders.
Yeah, so Elliott Wave, we've got a Discord group. Y'all can check me out on Twitter at Trade with Dr. John, and I do post there throughout the day. I make notes of unusual option activity. Sometimes I'll post some ideas that we have. We go live at the open. We go live at 9:30, and that just what we talked about yesterday is what we do. Right. So we're like, hey, I see this wave happening right now. I like this here, right? That type of thing. So now you can kind of get used to it. Be like, hey, we're in an ABC kind of chopping right now. Oh, Dr. John, he's like seeing like some impulsive action right here. Maybe we can catch like a wave 5 or a wave 3 or something like that. So we do that. And then, we chat throughout the day and share ideas and fun charts and fun gifts.
Cool.
And things like that.
How many people show up for your Discord?
We've got we've got over 100 folks in the group, and it's a nice crowd, and everybody's just kind of enjoys each other's company and enjoys
support each other,
watching the price action. Yeah, exactly, a good supportive group. So check me out on Twitter there, and other than that, that's how to find me. And hopefully we can talk again here too, Dale.
Okay, well, I'll leave you with this. Sinatra Ingmar says, I got pain in my ABC, Dr. John.
There you go. It is painful. Call the doctor.
Why? Hey, doc, when I move my arm like this, it hurts. My doctor said, well, don't move your arm.
Exactly. Rest.
All right. Well, John, you have a great demeanor. And you sure don't seem stressed at all. And it looks like you really love what you do. Congratulations on finding something that you're passionate about.
We enjoy
and
it.
helping people along the way.
Thanks, trading brother.
All right, my trading warrior brother,
that's
Dr.
right.
John Sinclair. Check him out, and especially if that's your acumen, you want to scalp. Check John out, and I'll be in touch with you, John. We'll get you scheduled for the fall, and everyone have a great day. You could join the team in about 22 minutes on the Morning Edge, and I'm sure John feels the same way. Don't just count your pips, count your blessings.
That's right.
Be grateful. I could tell John's a grateful person. You know why? You can't be depressed and grateful simultaneously.
It is tough.
So if you're down, just think of something that, look, anyone who has money to spec with is a lot better off than people choosing between should I buy food or medicine. So count your blessings. Exactly. And John, thanks for coming in today. It's always great Dale. To see you. Let me ask you, is that really your room or is that a backdrop, the screen?
Backdrop.
All the screens. Huh? All right. Exactly. Otherwise, I'd say, hey, John, you're working for NASA now. So
right, exactly.
What a spaceship.
All over and all that stuff. So
all right. Well, good hunting, buddy.
Thanks. Have a good day, guys.
All right. Dr. John, everyone. Adios, everyone. Have a good day. Good luck today. Good get into the room and make it, something you immerse yourself in. And we'll see everyone tomorrow. Adios.